Hi, what's up, traders? How you guys doing? Welcome to the first price action webinar with Capital FX. In these webinars, I'll be going in detail with respect to price action. So in today's one, I'll be covering head and shoulder patterns, trip informations, evening star, morning star formations, pin bars and shooting stars, and tweezer tops and tweezer bottoms. So the main goal from this class is to just show you the power that these candlesticks have, and that like you should really like focus on identifying these candlestick formations, especially on high time frames and also on your trading time frames, so 4 hours and 1 hour. So this is USDJPY. I'll be going through these candlestick formations and the head and shoulder pattern on this pair. So we've seen the head and shoulder pattern play out quite some time now, and it's really proven to really hold a lot of strong reversal when it comes to price. So let me just draw on the side here of what a head and shoulder is. So we have a head and shoulder and we have an inverse head and shoulder. So the basic head and shoulder pattern, let me just change the color there, make it black. Alright, so the basic head and shoulder pattern that we have is like this. So we have the left shoulder. So it's the left shoulder, and then price extends above this higher. Then it pulls back again, back within this range here, and then we have price shoot up again, giving us equal highs, yeah, giving us equal highs, yeah, giving us equal highs there, and then we have price drop like this. So this is the traditional head and shoulders pattern. So with head and shoulders, if you see this kind of pattern, we always wait for price to break this form of resistance and come test it again as resistance here. So any entries should be taken around about the right shoulder. So this is the traditional head and shoulders, and also has a neckline there. And then we have an inverse head and shoulder. So it is basically the opposite of this. So it's something that looks like this. So I can't stress this enough, guys, that these patterns will not look perfect on the charts. So but what's important is for you to be able to identify them and being able to trade them. That's what is important. So the same we have here. Then we have so that's the beginning of the left shoulder. Price drops, retraces, extends beyond this low here. Price pulls back within that range, and then it comes tested as support. So you can see we have a strong area of support here and here. So these are the shoulders, and that's the head. So if you just picture like a human being, so that's your shoulder, that's your head, and that's your right shoulder. So rules of head and shoulders. In terms of entry, so because the entry part is the one that's really important. In terms of entry, we should be looking for entries along the right shoulders. So entries here or here on the right shoulders. So here it's where you should be looking for any signs of reversal, any reversal candlestick, any maybe it's a three-pin formation, engulfing formation, evening star or morning star candlestick formation, a doji or a hammer or shooting star pattern. So entries are always taken on the right shoulder, regardless if it's a inverse or a normal head and shoulder pattern. Alright, so and in terms of targets, there have been many like stuff on like the internet on head and shoulder patterns, in terms of like where do you place your target. So how I use Head and Shoulders, and in terms of target placement, but I think it's also covered like when you read up on it online. So I normally target the beginning of the left shoulder as a target. So let's say the left shoulder started here, so that's the left arm. So I'll target this area here. That area there is my target. So I'd enter here, and then targets would be here, and then the same in the same way, I would target where the left shoulder starts as my target. So entry here, and then target here. So let me just tap that out. So that's entry, and then target here at the bottom. That's a target there at the bottom, right? So in the same way, it applies for an inverse head and shoulder pattern. So entry here, and then target up here. So that's just basically what a head and shoulder pattern looks like, right? So like I said, it's not going to be perfect. So you're going to have to do a lot of chart time, like to see these patterns play out. And always remember, guys, don't force the patterns. Don't make up patterns in your mind and think what's there is what you're picturing in your mind. Okay, so always trade the signs, and you'll be profitable. All right, so here's an example of a head and shoulder pattern. So this was shared in the Discord members group. So this is the actual trade that we took this week. All right, so it took about 3 days to play out. Okay, so the reason for this trade was also based off of a head and shoulder pattern. So, but in this example, it was an inverse head and shoulders. This one here. All right, so let me just take you through it. Let me just blow this up. Put this here. Bring this in here. Okay, perfect. All right, so let me just use the 2 hours. Okay, so it's 2 hours. Okay, perfect. All right, so let me just remove this quickly. So in terms of my price structure, so we had a high, so we had a swing high, and then we dropped down to get a swing low, and then we had a low high up here. All right, so this is where my left shoulder started. So and you see, guys, this is what I always mention to you guys, that for you to to have a place to be called a swing high, swing low, you should make that sort of shape. So for example, 1, 2, 3 pin pattern right there, and then had a swing low here. We had enough evidence by the presence of these candles here to warrant that as a swing low and then swing high. So that's where the left shoulder started, and then price dropped. So we had a swing low minus swing high, and then finally price found support here. Also 1, 2, 3 pin pattern on support, and then we had a minor swing high, and then price dropped all the way. And then so we now hit an area of support here. Around the regions here was an area of support. So let me just pull back this picture here. So you can see now clearly, yeah, perfect. So this is this, then the pullback, and then that. So can you see it looks exactly like this image here? So when you see this kind of an image forming, just draw a line on that area of support here. So always draw a line from here. So from the right shoulder, just draw a line across like that and right across the screen. So in this example here, our daily key level on 107 fell exactly where price was here. So just draw a line like that, and then just wait and see what price does. So we always want to see price break above and come test that area. So you want to see price break above and come test that area again from where you rated. Alright, so you want to see price break it and come test it again and give you signs of reversal there, completing the pattern. So in this example here, so we had price break, right up, right below, making a really strong area of support, and then price broke that area, and then it came and retested. So this is what you really want to see is price coming back again and breaking that area and coming to retest it again here and giving you signs of reversal. So this is what you will really want to see here. So in this example, we had a 3-pin formation, which we'll cover later in this video. So 1, 2, 3-pin formation on that area of support, completing our head and shoulder pattern. So in terms of entry, in this example, we entered quite early here based on other conferences, but for the purposes of this video, if we saw this entry, if we saw the setup here, we would have made entries at the close of the 3-pin here. So entries would be at the close of that candle there, and then our stops will just use just 10 pips below the middle spike here. That'll be our stop. So we'll just fade about like 36 pips. Then in terms of targets, we'll target the beginning of the left shoulder, the beginning of the left shoulder. So I'll just pull out this ray tool here. Our target would be more or less here, more or less there. So in this example, 76 pip target, 35 or 36 pip stop loss. So a really fair risk to reward ratio. So this is an example of an inverse head and shoulders, and then this example, an inverse head and shoulders will definitely work the same way as a normal head and shoulder pattern. So I hope the head and shoulders this pattern makes sense to you and I explained it properly to you guys. So I'm just trying to look for a normal head and shoulder pattern. So these patterns don't necessarily always play out, but when it plays out, it really does move the market. Okay, let me see if I can find any here. Maybe zoom out like this. Okay, I actually don't see one here. Okay, but it's fine. I'll cover it in our second edition of our price action video. So that's the head and shoulder pattern. Very useful reversal setup. Alright, so now we're going to get into our different types of candlestick formations which you ought to really pay attention to, because they hold a lot of reversal and they're also very good for placing trades. Let me just remove all of this markings on the chart. Alright, so the first one on the list is 3-pin formation. Okay, so 3-pin formations are basically a candlestick formation that has 3 candlesticks. Alright, so these candlesticks, if they're on resistance, they must create an A shape. If they're on support, they must create a V shape. So either V or U shape. Alright, so an example of a 3-pin candlestick formation is something like this. Right. So, and also one more thing to note with 3-pin formations, the spike in the middle. So rather, like the candle in the middle should have the longest spike. And then another thing that's important in terms of entry, we always enter at the close of the 3rd candle. So let me just note that. So the middle candle spike must be the longest. That's the first point. And secondly, we enter at the 3rd candle, at the close of the 3rd candle. Alright, so that's rules of 3-pin formation. Alright, so we have one here. Let me just pull this up here. So it's 1, 2, 3, making that sort of A shape. And the third candle was a bearish Marubazu, so this was a very nice candlestick formation here. And in terms of entry, we entered the close of the third candle, so entry right at that close there. And then in terms of stop loss, would really use like a 10-15 pip stop loss above the middle spike. So this was 89. So go for 99 or just above this key level here. I'm sure so works. Alright, so that'll be in terms of entry would be there, and then just see how price just dropped immediately after that 3-pin formation, and prices dropped all the way rather than daily area. Alright, so that's 3-pin formation on a sell situation. I want to show you 3-pin on a buy. Here it is. Yeah, there's a 3-pin here. Just pull this up. So the 3-pin here, can you see 1, 2, 3? That was a nice big engulfing candle. Yeah, 1, 2, 3 pushed that price. So in terms of entry, could have entered at the close of the third candle. Sometimes it's a bit tricky because the third candle could be fairly big. So if the third candle is really big, just measure 40 to 50% of the large candle and then wait for price to pull back there. So for example, you just draw your Fibonacci from the low to the high of this candle here, and then just target 50% or 40% and then take your trades there. But that's only if the third candle is really long. But if it's small, for example here, there's no need like to draw up a fib on the candle. So entries here at the close of the third candle, and then in terms of stop loss, 10-15 pips below the middle spike, just nice and tight there, and then let the trade run. All right, so that's an example of 3-pin formations. And then now we'll look at evening stars and morning stars. So in actual sense, evening stars and morning stars are a type of 3-pin formation, but morning stars and evening stars have specific criteria. All right, so the criteria really with evening stars and morning stars is that the middle candle of the 3-pin formation is either a doji, a hammer, or a spinning top. All right, and then with the 3-pin formation, the third candle really could be any type of candle. It doesn't really have to be a doji, a hammer, or a spinning top. All right, so with evening stars, morning stars, the middle candle has to be either a spinning top, a hammer, or a doji. The third candle has to be one. So for example, this is an example of a morning star. So morning stars on support, evening stars at resistance. So morning star here, you can see one. So this is the first candle, bearish. The middle candle is the one that says there's a lot of price indecisiveness, and then the third candle is a momentum candle. So the middle candle here, so this example here, this is a nice example of a hammer candle. You can see prices dropped all the way and then pulled back up, clearing out any orders below this level here. And then look at the third candle, a big green momentum candle. So the third candle is the one that initiates the direction of the trend. So this is a nice example of a morning star candlestick formation here. So in terms of how to trade these ones, you also take a trade after the close of the third candle. If the third candle is really long, you just measure 50% or 40% of the third candle and then place your trades there. So this is a nice example of a morning star candlestick formation here. And let's look for an evening star candlestick formation. Look for an evening star. Okay, so here's an example of an evening star formation. 1, 2, 3. The middle candle, can you see guys, give us a nice hammer candle. hammer candle, and then the third candle engulfing, and then price pushes downwards. Here's another example of a morning star. You can see how I had one hammer candle engulfing, pushing price up, and then price just went all the way up. Let's see another example of a evening star candlestick. You can see is a 3-pin here, 1, 2, 3, entry at the close of the third candle. Just look if I can get an evening star candlestick formation. Okay, here's one here again. Just zoom in. Zoom in here. Alright, here's one here. One hammer candle. And then thirdly, engulfing. So the third candle is more or less, it always engulfs price action. So 1, 2, 3 engulfing, entry after the close of the third candle. So that's a nice example of an evening star and morning star candlestick formation. So, and also you want to see those candlestick formations on support and resistance, because those are the places where they tend to move price a lot. Alright, so here's another example of 3-pin formation. 1, 2, 3. Can you see what happened to price? Price is shot up all the way up. Alright, so second on the list is pin bars and shooting stars. Alright, so pin bars are normally found on support. So pin bars, are also known as hammers, are normally found on support, and then shooting stars normally found on resistance. So we normally buy on pin bars, or rather pin bar closes, and then we normally sell from shooting stars. Alright, so an example of a pin bar, here's a great example here of a pin bar. Let me just blow this up. So here's a nice example of a pin bar. So like we discussed previously in that in the previous example, when you looked at 3-pin formations, here's one here. Here's another one here. You can see. So we had our open price, high price, sorry, open price, and then prices shot downwards, and look how it pulled up, and it closed below there. So pin bars generally have smaller bodies compared to the spikes. So here's a nice example of a pin bar. So in terms of trading pin bars, I would not necessarily advise to just take trades because you saw a pin bar. It's always nice to have that extra confluence, like a 3-pin formation, 1, 2, 3. Yeah, so but you can trade pin bars, but I'm just saying, like, in terms of advice, just wait for further signs for you to take a trade. So also, another thing for pin bars, what they really help us with is also they also help us to identify whether we should be still in a trend or a specific trade. So for example, here we had price coming from the lows and then highs, and then look at that pin bar here. Pin bar here telling us that price is failing to go downwards, and then pin bar, and then look what happened to price. Right, so pin bars also tell us when to exit a trade. So for example, if you're in this short trade here, an example of a pin bar to tell you that we are no longer in a downward trend, we're in an upward trend, would be this one here. Right, this one here. So they also tell us that, guys, price is exhausted, and then we're about to change direction. So it's an example of a pin bar here. Pin bar here, another pin bar there. Right, so in terms of pin bars, you can take a trade after the close of the pin bar. So an example, if you missed any price action here and you saw this pin bar, you can take a trade at the close of the pin bar there, and then you can put a fairly tight stop loss. I normally put 10 to 15 pips below the pin bar, and then let the trade ride out. So this example of a pin bar, Then let's look at examples of shooting stars. So you want to see shooting stars at areas of resistance. Just find shooting stars here. Alright, this is a nice example of shooting stars. Let me show you. So the first example of shooting stars is this one here. Looks like a hammer. So it's basically like an inverted hammer, which is red. Alright, so that's the example of shooting star there. Shooting star there. Price is pulled back up and then closed below. There's an example of a hammer there. And it's also a type of a 3-pin formation. 1, 2, 3. Alright, so here's another example of a shooting star here. So shooting stars is telling us that they're rejecting that area. So let me just do this. They're rejecting this area here. So they're basically saying they're rejecting a specific area and then price is pulling down it. Then this example here. You can see here, rejecting this area. Rejection here, price drop, rejection here, price drop. And also another characteristic of a shooting star, though the low wick is not really long, like it's short. Sometimes the candle doesn't even have a wick at the close price. It's either no wick or very small. Rejection here, price dropped. Just see if I can find another one. Okay, here's another one here. See, at an area of resistance here, rejection, rejection there, and then price dropped. So, and also forms part of a 3-pin formation. 1, 2, 3. Then any entries at the close of that shooting star, and then 10 to 15 pips above for your stop loss. So entry at the close of the shooting star. Then in terms of stop loss, 10 to 15 pips above, so 58, 68. Nice and tight stop loss there, and let the trade ride out. Alright, so just come back to, okay, so that was an example of shooting stars and pin bars. Alright, so the last type of candlestick formations we'll look at in this video are tweezer formations. Okay, so tweezer formations look like this. So just do that. Right, so tweezer formations are basically it's a pair candle, so we need 2 candlesticks to make up this this formation. Just make this straight, okay, perfect. And then one more here. Alright, so with tweezer tops and tweezer bottoms, really, you have tweezer tops on support, tweezer bottoms on resistance. Is that the wicks are of almost equal size, so that this is like the very first variation. Then other variations look like this. The body, so the bodies don't have to necessarily be the same size, but the wicks should be of almost equal length. Alright, so that's tweezer formations, and these hold a really strong amount of reversal in them. Alright, so let's just go through the charts and see if we can find any tweezer formations. Alright, so there's one here that I've identified, a tweezer bottom. Tweezer bottom, let's move this here. Identified a tweezer formation here. You can see these two here, 1, 2. these two here. 1, 2. You can see the wicks have almost equal size. And then look what happened to price after that. Massive reversal. Another tweezer formation here. Can you see? 1, 2. So a trade at the close of the second tweezer candle. That's where you take your trade. Alright, so that's an example of a tweezer bottom, another tweezer bottom. And then let's look for a tweezer top. Here's another example of a tweezer bottom here. Let me just run through quickly through this trade here that we took. So we took our trade. Obviously it was based on the head and shoulders, and then also again we had a tweezer formation here. This. We had a tweezer formation here. Yeah, 1, 2 tweezer formations. Yeah, so we took our trade at the close of this candle here. So that was our reason for taking the trade. Head and shoulders, number 1. Secondly, tweezer formation. And then price just went up all the way. Went up all the way. Alright, so let me just get an example of a tweezer top. Tweezer to the top. Just bring this in. Alright, just give me a moment. Should find one. Okay, perfect. We just found one. Here's one here. 1, 2. These 2 candles there. Making a tweezer top formation. Alright. Measure 1, 2. Then if I draw a line there flat on that candlestick wick, see the wicks are almost of equal length. So that's an example of a tweezer top there. Entries at the close of the second candle of the tweezer. Then had this nice bearish market bounce as a confirmation of price, and then look at what happened to price. Just dropped all the way. Let's see if we can get other tweezer formations. See guys, hammer candle on the key level. Just that extra confidence, hammer on the key level. But we'll cover this in other price action webinars where we combine all what we've learned to get strong confidences. Tweezer bottom. There's no example of tweezer top here. Tweezer top there. 1, 2. Nice close. Nice engulfing close. So any entries. So entry after this candle here. So entries after this candle here. And let price right out by itself. Alright, so let me just go back to where we were. So in terms of identifying like the trend and in what trend we're in, either in a downward trend or an upward trend, is the bulk of the work. And then what should follow next, you should be able to identify these candlestick formations on your charts. So the best thing to do is to just go for any pair, your favorite pair. just make sure that your screen is clean and clear, and then you just mark out these candlestick formations and see how they play out. All right, so that's the best way for you to be able to sort of train your eye to see price action play out. And by doing that, you will definitely improve in your trading. That I can guarantee you. All right, so thank you so much, guys, for this webinar. I will be updating when I'll be posting the part 2 of the price action webinar, and I hope that you guys have a great trading journey. Thank you.